So in this panel, we're really interested in getting a perspective on how the investment community and their roles can be supported to accelerate towards a more sustainable future. We have three leading figures representing different financial market actors, I would say. It's my pleasure to introduce Kristin Magnusson, Bernard, CEO of the First National AP Fund, AP1, also an alumni from the Stockholm School of Economics. Thomas Tyblad, come on up. Thomas Tyblad, who is the Vice President and Head of ESG Solutions at NASDAQ, also a partner company in our Sustainable Finance Lab. And then finally, we have renowned Karl-Erik Lagercrantz, CEO of Vargas Holding, Chairman of Northvolt and Polarium, as well as Vice Chairman of H2 Green Steel. So we just heard about 2 weddings and a funeral. I think we'll come back to that in this discussion. But what I thought was that each one of you could start out with 3, 4, 5 minutes to introduce your organizations and how you're working with sustainability and sustainable finance. So, Kristin, would you like to go first?
Thanks very much indeed, and thanks for having me. It's an honor. I thought I'd just give you a brief introduction to what an AP fund does and how I see the E and the S and the G linking up. And let me congratulate you on the choice of title for today's seminar, because on the contrary to what we just heard, there's nothing we discuss more within the financial community. So the AP funds, I'm CEO of AP1. There are 4 buffer funds. Together we manage about 2,000 billion Swedish crown, somewhere around $200 billion US. We can invest in basically anything, anywhere in the world apart from commodities. It's chiefly listed equity, private equity, so in terms of full disclosure, yes, we are invested in Northvolt. Through one of our PE companies, it's bonds, all parts of the bond market, real estate, and infrastructure. This week, I had the pleasure of being in a 3-hour hearing, or you could call it grilling, in the Finance Committee of Parliament. Emma was there as well. And I think one of the questions you get asked most frequently as CEO of an AP fund is, so the fact that returns and risks are set as the chief objective while sustainability concerns is, so to speak, the supporting actor, if you will, doesn't that stop you? Isn't that an obstacle when it comes to investing in sustainability? And I think it was a pretty loud answer from all of us. That's not our chief concern. The biggest challenge is how to link the E and the S and the G. But I'm not ready for funerals yet, so I'm going to give you a couple of weddings. I think if there's something that's positive that came out of the invasion in Ukraine, it's actually that we're shrinking the time frame. Because the challenge we had was that climate transition was kind of a long-term issue, which even for a long-term investor is hard to get people concentrated. But when you shrink the time frame, you actually also put the conflicts in the potential conflicts in the E and the S and the G at the same sort of decision point, which makes it a lot easier. So there might actually be positives there. Where I see more challenges, opposite to previous speakers, is that actually the bond market is a very difficult part for investors still to express sustainability development objectives, because you have social blue and green bonds, and they all address one thing. They also make the bond market function a lot worse, and that's something we need to talk about. But when we come to equity, yes, I would say data is patchy, with knowledge still patchy, but actually that's the same thing with everything else we do. I might have concerns about Northvolt's ESG credentials. For the record, I don't. But it's no different for me to judge another company. It's always uncertain prospects. But what I think is even more key is the goal setting, as someone mentioned. Because the thing is, climate goals, you can put numbers to that. It moves over time, which makes us numbers people very enthusiastic. It's easy to measure progress, etc. And there's a real danger there. So maybe that's goal setting is a potential funeral, at least a potential one. So we need to think about how to get the S and the G into our goal setting. Thank you.
Thank you.
Well, thanks a lot for inviting us here today and talk about what is super important from a societal perspective. I'm coming a lot from, if we look at it from an investment angle, of course, but I think I would like to, just look at the bigger picture, and I might also want to, actually add a bit more light color to the horizon. I think we are facing a lot of challenges across many sectors of society. Amongst one of the biggest one is, of course, the environmental side. I think also we are challenged on democracy in some ways, and all of this needs to be addressed in a good manner. And in a way, I agree. I think when we are put to a challenge as a society, as as a global society, my view is that then we actually are able to get things done. So I'm more positive than some of the previous speakers. And if we then look at it more specifically, what is happening within the bigger field of sustainability and sustainability investment. I have to say I'm a big fan of the Green New Deal and what's happening on an overarching EU perspective. I mean, really making sure that there are very sort of clear sort of policy frameworks that we can follow from an investment perspective. And I think having that sort of laid out in the manner it is, it really addresses a lot of different areas, and that is creating opportunities, because we need frameworks. We need very sort of clear frameworks in order to make very large investments into the long term. So I'm very happy on that, and I'm seeing that evolving in a very positive manner. I've worked very closely over a long period of time in our different companies. From the, I would call it, from the on the basis of our investments that we are doing, then you need to be super well anchored in the broader European or global society and understand what is going on. And then, if we move, further back into a sort of a Nordic or a Swedish context, I think I really see that there are sort of great advancements happening. And I think not only, are we able to deploy a lot of capital into areas which are really I would say vital for decarbonization. That's the way I see it. And then looking at, from my perspective as an investor, I'm quite sort of agnostical from an investment perspective. I see these big mega trends of decarbonization, the laid out framework, and the societal need for new value chain, because that's new value chains, because that's where it starts. It starts with the customer, the individual, as a part of a society, and there is a lot happening there. The pull from that angle is putting a lot of pressure on us all. And of course, yes, we will have challenges in developing new value chains, but I really see great opportunities understanding the overall, framework of what's going on, and then looking at it from a decarbonization perspective, the need for electrification, and the need to put new technology to work. I think that's a fantastic opportunity. And for individuals who are, looking at this as a challenge, the challenge has a lot of opportunities. And from my perspective, I see that what we're looking at now is a 10, 20, 30, 40-year transition into a much better society than what we had before. It's about a decentralized energy society, which I think, and I say it sometimes, I think, we look at energy prices today very high. I think over time, energy prices will fall down to almost zero, because there will be energy costs will only be related to capex. Capital expenditure will decide. That will happen over a longer period of time, but we are building a much more robust system, which is a sort of a circular system of sustainability, and doing that is creating a much better society.
Thank you. I'm going to come back to you with a lot of questions, and I think it was touched in on one of our audience questions here as well. But first, Thomas.
Okay, thanks. Nice to hear some positive
news,
some weddings. First of all, just to introduce myself and the organization I represent. I work for NASDAQ, and most probably know that we run the exchange in the US and here in the Europe or in the Nordics. But we actually do quite a lot on the technology side, on the data side as well. And we, for instance, have very much focus on financial crime side and have solutions for that, etc. In terms of the ESG and why we are focusing on that, I can just say that we have done that for quite some time. We were the first stock exchange to have a separate segment for the green bonds, even if you don't fully like them, or the liquidity. Okay, let's take that afterwards then, or maybe today. And we also have futures, tradable futures on ESG flavor ones. So that was the first exchange as well. But generally speaking, we see it as a core function of the role we have in terms of helping and supporting the corporates in their ESG journey, to ensure that they get access to capital over time, because we believe that strongly that they have to be on the ESG journey to become fully sustainable in order to have access to capital in the future. Secondly, in terms of from the investor side, transparency, and that is what can we do to improve the transparency in order for the investors to be able to make informed decisions. And we do this in different ways, either to be like facilitator, to have to link the investors and the corporates together. It could be through like information and education. For instance, when we have new companies listed at our exchange, we have like mandatory courses in the ESG side, so we ensure that that will come up on the agenda. And then we also have some more hands-on solutions and offerings to the corporates and investors, and that could be in the green bond side, sustainable bond side, for instance, transparency platforms for the investors. It could be different solutions for investors to provide to their clients in order to how to digest all this massive amount of ESG data. It could be for the corporates, and especially like smaller corporates, less mature corporates, ESG reporting guides, what to report on, how to report, etc. And now lately we are also stepped into the carbon removal side actually, and have a solution there that is very early yet, but very interesting. And that is in a way to be able to support the corporates, not only what to measure, how to report, but also actually to manage the emissions in the end. So where are we and what are the challenges? I agree with a lot with many of the other speakers. On the positive side, I think we do see a huge move from the private sector, and I think previously it probably were more on the policy maker side and researcher side, etc. But lately it's been a massive move on the private sector side. And I think that is extremely positive, and especially when you have this.
What do you mean by the private sector side? A move
both the corporate side, the corporates are moving, and also on the asset management side. I mean, for instance, take the GFANs with the Glasgow Financial Alliance for Net Zero, and you have the commitments that are there. The problem, though, and the challenges is, okay, how to operationalize this and how to actually take it from the nice words and the commitments on board, and to actually move it into the organization, into the asset investment decisions, I would say. And a bit the same for the corporates, of course. It's a lot of corporates coming and actually want to make good and have another, I would say, real will to reach there and realize that it's not just about ticking the box. You need to find a real sustainable business strategy to be there in the future.
Thank you. I hear, and in a sense, it was a bit of the purpose that you're representing very different parts of financial market actors, and I want to get back to why you have a better solution to green bonds, but we'll get to that. But I hear also, I'd like to hear, we have a wonderful entrepreneur, you can say, who very much sees the weddings, I would argue. Tell me what would make your job easier. How would, we've talked about the standardization, the transparency issues. From a research perspective, it's very hard to, when you don't have standardized and transparent numbers, you can't compare as an investor either, what it's really saying. But as an investor, what needs to be done? What would help you in moving us forward quicker, because we have short time?
Yeah, no, I think we need large-scale solutions, and we need to. I think we need to rapidly scale, and to rapidly scale, we need to adjust some mechanisms from a societal sort of permitting perspective. We talked about that. It was touched on before with regards to the different types of renewable solution that needs to be put into place faster. But that's one side of it. But it's also about permitting for environmental permits for building large-scale industrial process and so forth. And so, I think we need to address the challenges in a much more rapid way. Therefore, all of the mechanisms for developing the next generation of industry, which is going to be decarbonized and which is going to be, in different verticals, from battery to steel to alumina to fertilizer, whatever it might be, needs to be addressed, in the manner that the problem is there, and therefore some of the structural processes needs to be adjusted. I think that would be the biggest help for really moving and accelerating forward in a bit of a. It's not about money.
Exactly.
It's not about equity. It's not about debt. It's not about governmental support. I think policymaking needs to be very, very long-term supporting. But the societal change is so strong that governmental sort of incentives, in some ways, will not play the biggest role.
But I'm thinking about getting these permits and so on and so forth. It's taking a lot of time, isn't it? I mean, given the fact that we need to accelerate with the challenges that we have, are we going to be able to, get there quick enough? And isn't it the
I think
the
we
state?
will. I think we will. I think if you look at these many industries which are legacy industries, which are big emitters today, they have the biggest problem of moving forward as fast as possible to decarbonize. That's a problem. And I look at many problems from a greenfield perspective, because it's about building new industry in the right energy geography, where there is the right relevance for building industry. And I think, as we said before about electrification, a lot of industry will be electrified. This will happen over a long period of time. This means also that you cannot have energy-intensive industries in geographies which doesn't support that, and therefore there will be a change of the industry landscape. I think Sweden, to a large extent, can be winners of that. And looking at it from an industry logic perspective, and looking at energy geography, and looking at setting up brand new value chains, which doesn't have an hindrance in old balance sheet legacy, which is sort of slowing down the process. That's, I think, is looking at the problem and the solution.
If I could just pick up on that one, let me see if this one is on. Great. I'm actually a lot less concerned about your segment of the market compared to the legacy industries you're talking about, because the thing is, both the investors that are looking for your kind of projects, they are used to assessing that kind of risk. And I understand sort of the impatience from the permit and the entire process side, but transforming the legacy industries and transforming the market within the system we have, so we don't throw out all the infrastructure that actually works, that I see as a much bigger challenge. And the challenge there is the combination of urgency and patience. And it's patience also on the side of investors, because if I look at a lot of the classical companies, heavy emitters in our portfolio, many of them are trying to do the right thing, and they are on the right path, but it's just very hard, and it takes time, and it's a very complex set of challenges very often. So at the same time as, there's the climate urgency, we need the change to happen within the existing companies and the existing structure we have.
You were in on talking a little bit about the ESG standardization as our researchers were talking about. How do you, when you're working with it as investors, how do you, it's third party most of the data that you buy in. How do you feel it's helping you? What would be the best solution to the multiple different standards and the problem of comparison?
I mean, in long run, I think we all hope that we will have more or less one standard or going in that direction.
We're going to make that, right?
Yeah, that would be fantastic. Because right now, as a corporate, it must be horrible. You have like 20 different recipients at least to follow, and it's very very cumbersome. I think the EU regulation, when it's done, that's going to help a little bit. Absolutely. I think the IFRS foundation work and with the work on the more global level, with the upcoming standard, that should be good, but it will take time. It will take a long time. So meanwhile, there needs to be these solutions where you try to normalize, try to scrape the data, etc., to provide some data to the investors at least. But I agree with the earlier speaker. I think it's what we need to be able to do, find solutions so you can provide the data and not the score after a black box. I think that would be very helpful.
So Kalle first, and then Christian, do you want to respond to that?
No, I think it's super important to have and to really get the right types of data into the picture. And I mean, science-based targets, for instance, if you look at it from an ESG perspective, I think that is super clear that it's coming very strongly into, to really be relevant on that is actually not sort of, well, then you stand out. It's like if you're not, you're going to be, you're definitely falling behind. And more companies are super cautious on that.
But they don't have the S there, though.
No, I think there are. I mean, I said on the environmental side. I know that I think there are issues which I would like, and I think it's going to come into the picture much more on, which is more about specifically around the S, where I see a lot. And I think I would personally, in the companies that I operate, I would like us to be very strong on that S and stay away from certain areas of industry where you do not want to associate yourself. But the other way is that it's going to be the customer who decides on this. The end customer is going to be super, if we call it focused on choosing the right supplier, the right company that they want to buy product from. And I often talk to our customers, very large customers around the world, and I tell them, you want to be a premium player in the market? And they say, yes, we are a premium player. We build the best products. We have the best technology. We are, we have the greatest of engineers who does this. Well, are you sure? I mean, if you really want to be a best in class, do you think you can sell a product which has more carbon than somebody else? Do you think do you think that you can still call that a premium product? And then they start to react. And I think these are the type of topics that we know that the end customer is looking at, and we know that companies within different types of industries will be looking at this very hard over a long period of time.
We teach exactly that here in the business school, about thinking about the win-win to your customer, in a sense that if you're building and designing a product that will also help your customer or consumer reduce their carbon emissions, that's a win in that sense as well. So I think we talk actually quite a lot. I hope our students agree with that, on exactly that. So I understand your point.
And that's
very
a big topic in every boardroom as well. So.
Absolutely. And I think here it's important to be aware that the situation is very different compared to what kind of investor you are. If you market your products to a retail audience, which many do, then this is sort of the end and the beginning of the whole discussion, because how are you to assess whether the fund you buy is actually green? I'm in a luxury position because none of you can take out the money out of my fund. And that means that we actually have much more intellectual leeway in taking all the sustainability data, and we use a number of different providers. We can build our own scores, and we can use them in sort of a fundamental way to look for opportunities that we think serve the E and the S and G. But obviously that's not the official methodology. It's not disclosures I could market if I were running a UCITS fund instead. So I think especially to find the disclosure and metrics and standards that work for a retail audience, I think is one of the key issues, because otherwise you're going to face a backlash, because you have the concerns around greenwashing, and they are real, because as long as anyone can market anything as green, there will be lots of disappointment as well.
Thank you. Our time is running out, but just a quick, and I'm going to throw you a little bit for a loop since we're in a business school here. Is there a trade-off between financial profit and sustainability?
No.
No?
No.
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 Great. Kristin, Karl-Erik, Thomas, thank you very much.
Thank you.